Hello, today is February 24th, 2024. We always start with our disclaimer. We go over our calls, make some predictions, and take a look at the long-term picture on the weekends. It's my trading plan for Monday, which is February 26th. Please remember it's a plan. I can change it. It can be wrong. If you want to order my webinar and my system, the MEJT system, I really need a Gmail address, which you can send to my Gmail address down here. Well, Thursday night we said that our plan was that we should drop from the open. If that didn't happen, I didn't have a plan, so that didn't happen. I didn't have a plan, and we closed essentially unchanged. So I don't mind not having a plan if we don't make a move, if we close unchanged. And when we close unchanged, I just repeat my prior prediction. We also looked for the pattern. Here's what we said. We looked for the pattern with the early high, which is what we had. And Monday's pattern should also have the early high. We looked for a gap in the prompt move outside the day's range. We certainly got that. And no plan and no move, I just repeat my plan. We have a possible top here. We had this cup here's a cup, upsloping handle. We said this has been challenged many times. Once it breaks, investors, business, and Daly's rule calls for a drop back down to the origin of the pattern. That would be quite a drop. The only thing that would, now it's possible you can come back up to this line, even hit a new high, but I'm not really looking for that. We have a gap up to a new all-time high, a rejection of the high by closing under all of today's highs, all of Friday's highs, and even under Thursday's highs. Well, during the day we got a buy signal from MEJT, but the minimum target printed immediately. This drop was called false, but it's already retraced, so that's played out. This is the weekly chart. This is an active pattern. We have the active bar 13 of DeMarc's combo sell signal. Stop losses are measured from here to here, and they tend to be resistance areas, so we stop right at his resistance area. Now this is the monthly chart. Now these signals aren't really active signals, but they still generate levels I find significant. One level is where the pattern starts, and that's way down here. That's what he calls his TDST line. We're nowhere near that. But the other is his support resistance levels from the pattern. Now this one says we were overextended back in 2021. That doesn't mean much now. And this says we were overextended months ago. I don't think it means much now. But let's look at the resistance levels based on his stop losses generated by these signals, even though they're quite old. You measure on his combo sell from here to here. That's in green. And you measure from his sequential sell from here to here. Now let's look what's happened. This stopped right at the line, and look what's happened in the last 4 months. The monthly high was right at the line, monthly high was right at the line, monthly high was right at the line, monthly high was right at the line. I mean, we've had this 5111 number shown for a long time, and we stopped right at 5111. I mean, what are the chances this would happen by accident 4 months in a row and 5 out of 18 months? I mean, these are all patterns, but I think these levels still have significance. So we stopped right at resistance here too. Well, we've had 5,087 as our target for quite some time. We've gone past it by 24 points. That's under 0.5%. I'm not really convinced at this point that that kills the idea. This central pattern tends to occur where there's Fibonacci relationships to highs and lows. It missed the low by 14 points. So far it's missed the high so far by 24 points. Again, 0.5%. I'm not certain that changes things. I mean, we're still in the area where I think we could have a top. Now let's look at this last move up. I mean, it's really possible to count this now. If this is wave 1, you set it at 61.8. That's wave 2, it's at 100. And so is wave 5. I mean, the fibs are there if that's the end of wave black 1 up. And then if you look at this whole pattern, we'll look at this. You can see that the move up is exactly twice the move down. So you have some good Fibonacci relationships. Now let's look at this last wave up, wave that starts at the end of wave 4 and goes to 5. We'll just look at this. Here's 4. If that's wave 1 and that's wave 2, that could be 3, that could be 4. And 5 is exactly equal to 1, right at the high. So we have a number of different patterns, totally unrelated patterns, pointing to this area as a possible top in the market at strong resistance. Of course, if you gap over and keep running, we don't know yet, but right now there's very strong resistance at that level. And not only is there strong resistance at that level, we've left some MEJT targets behind. We have this cup with upsloping handle pattern targeting a return way back here, but 150 handles lower than minimum. Here's your stilt. A half a diamond's enough. We could have a stilt-like move down. Now, the pattern doesn't have to go to completion. You don't have to get a stilt, but if you do, the support level is at and just under the origin of the stilt. I mean, that's pretty negative stuff if we start down. And of course, we don't know if we start down until Monday, but we couldn't hold on to any of these highs after hitting a new all-time high. That's not what you want to see. If that's maintained at the open, that's a rejection of the high. So, Monday's pattern has the early high. This is the patterns we'll see next week. Monday's pattern has the early high regardless of where we open. Pattern has a late low. The late low isn't always lower than the early high. We gapped up and hit a new all-time high but closed under multiple prior highs, and if that's maintained at the open, it's a rejection of the break to a new high. It should lead to lower prices. Now, a friend of mine has a system that generates targets. Today's high hit one of his numbers within 1 cent. It also is a target of a valid wave count and the DeMark resistance area. They all come together in the same place. And if the interpretation of recent action as a breakdown of a cup with upsloping handle is correct, we should return to the origin of the pattern. That's quite a ways lower. Friday, both an online news site and NBC Nightly News ran stories about NVIDIA and the stock market. Market comments on mainstream media have an uncanny correlation with trend reversals, often nailing the turn to the day. When you see a story on the front page of your newspaper or mentioned on the news broadcast, talks about the market move, there's a good chance that moves over. I think it's a reliable sentiment indicator that we've gone too far in one direction. We have almost everything we need for a sizable decline to begin right here. All that's missing is for the market to stop giving signals and start dropping. Could well happen Monday, and if not, I have no plan for the day. So it's the same thing I said at Thursday's close, because when the market closes changed, I don't change my thinking. Sometimes these get delayed by a day. We have just about everything we need for a big drop here. If we get a big drop, my plan's to play it. And if we don't get that, I really don't have a plan. This is a level I've been waiting for months. We're finally here, and I'm not going to change my mind now. It's the pattern with the early high. If we start down, my feeling is look out below. And that's today's call.